But yeah, I mean, we have to give credit where credit's due to the Islamic banks. What they did was they came and introduced Islamic Finance version 1.0. And one of the major things they did was help starting to level the playing field, because the regulatory and tax regimes were never designed for Islamic offerings.
Yes.
So it was never a level playing field. And the Islamic banks have helped to level it. It's still not level, but it's a lot better than it was before. So for the last 20 years, there's been no innovation in the Islamic finance industry whatsoever. And now fintechs like Pfida, and like there's several Islamic fintechs in the UK now doing really great work. I have to give a really big shout out to all my fellow Islamic fintech founders doing great work, mashallah. And now what we're doing, our mission is to take Islamic finance to the next level and really reach that level of purity where there's no difference of opinion in the scholarly community and where customers just get it, right?
Because it's a simple model. You don't need a fatwa to have some peace of mind. Actually, this is great. You can see how simple and transparent the process is.
Exactly. With our product, so so as well as having an internal Sharia scholar, we have an external Sharia body, and they do the external Sharia certification. And I quite often say to my partner Salman, do we even need that external certification? Because our customers don't even look at it. They look at the model and they just instantly feel comfortable with it because it's just such a simple, transparent, clear model. And you just know in your heart of hearts, there's no riba here. It's just obvious, right?
So Raza, the model that you use, what sort of label would you attribute to that? How would you describe it from an Islamic perspective?
So the model we use is what's called a musharaka, or a partnership model. And it's called a diminishing musharaka. So what that means is our partnership share diminishes as your partnership share increases. But a lot of diminishing musharaka models are based on debt, where you must buy my share from me. And that's what creates the issue, because anything you pay on top of a monetary debt effectively replicates riba. With our model, there's no debt. You're not obligated to buy from us. It's just like buying from a landlord. You decide if or when you want to buy from us. So that's a musharaka.
But the obligation isn't there. That's, I guess,
there's no obligation, no debt, and therefore there's no two contracts in one.
So how's that different from, say, some of the traditional Islamic finance institutions? So
one of the key issues with Islamic banking on a global basis is that it's really stagnated and there's no new innovation. But one of the biggest cons in Islamic finance, I think it is worth touching upon this, is a concept called commodity murabaha. Now, commodity murabaha is, it involves a fictitious sale of metals to try and get around the prohibition of lending with interest.